Maybe the best strategy is not obvious. Maybe it's not about buying the bear market and selling the bull, be this for Bitcoin or be this for tech stocks. Maybe the best strategy is to look for asymmetries. When is one asset diverging from another asset? What we see in green, that's the price of cacao. What we see in blue, that's the price of coffee. Two agricultural commodities with very similar inputs: land, labor, energy. And so the ratio between cacao and coffee tends to be somewhat stable over time. This chart starts in 1980. The dotted line, that's the average ratio. Sometimes cacao is expensive, sometimes coffee is expensive, and maybe that's the best risk to reward. To trade the ratio between two assets and not to time the market and attempt what everybody else is trying to do. Now in crypto, the most common ratio is Ethereum to Bitcoin. This here was the ICO bubble with the subsequent burst. This was the run-up up to the merge when Ethereum moved from proof of work to proof of stake. That then became a sell the news event. Ethereum underperformed Bitcoin up until Tom Lee started to buy BTC. Then Ethereum went down again because Tom Lee's purchases slowed down. But now this negative trend seems to have broken. Why did that happen? One explanation is ETF flows, as in Ethereum's outperformance in the middle of last year was a lot of purchases by Tom Lee, but the ETFs in the US, the spot ETFs, also bought a lot of Ethereum. This is how much of each respective asset circulating supply is held by the spot ETFs. When we look at the ratio, we can see when there is way more Ethereum being bought relative to its circulating supply, then Bitcoin tends to underperform. When Bitcoin is being preferred, that's then when it outperforms. And in the last 2 months, we have seen more purchases by the ETH ETF than by the Bitcoin ETF. And that was mainly Bitcoin supply just staying stale. And I think this has something to do with the general sentiment, right? Michael Saylor's strategy turned from a net buyer into a net seller. Even though the amount of Bitcoin that's getting sold can be neglected. 1,700 Bitcoin over 1 week is nothing compared to how much the company holds, which is 847,000 Bitcoin. At the current rate of selling, Michael Saylor has a stack that lasts almost 10 years. So really the hesitation towards Bitcoin and Ethereum's relative strength is psychology. It's just the current narrative of the market. We don't have a buyer of last resort for Bitcoin anymore. But MicroStrategy is slowly getting into better shape. For example, here, the preferred equity instrument STRC is recovering. It's getting closer to its target $100 notional. When we are at $100 again, then MicroStrategy can buy Bitcoin again. This decoupling is what the market shook. And it all started off with the first sales of BTC in order to pay STRC's dividend. Just have a look at the Bitcoin price since the decoupling. Once the decoupling occurred, Bitcoin crashed. Now that STRC recovers again, Bitcoin stopped crashing. Here is MicroStrategy stock relative to the Bitcoin price. Since the company started to buy Bitcoin, the stock slightly outperformed the underlying asset by roughly 40%. This horizontal line that we see here, that's when MicroStrategy is worth exactly its Bitcoin holdings. So when the net asset value premium is 0. When we are above, Michael Saylor has the option to sell more stock in order to buy Bitcoin and lock in the premium. When we are below, MicroStrategy cannot buy Bitcoin. So the market is not discounting MicroStrategy's Bitcoin holdings, but it's also not putting a strong premium on it either. So what's going to happen with MSTR? I think it mainly has to do with Bitcoin's relative performance to technology stocks. And that's the long-term chart. This is Bitcoin divided by the Nasdaq 100, the leading technology index in the US. Relative to tech stocks, Bitcoin has already bottomed. Those bear market bottoms align quite nicely. Bitcoin could easily outperform by 150% from here. But that doesn't mean that Bitcoin has to appreciate measured in US dollars. At the end of every bear market, the net unrealized profit and loss went into the negatives. And I would not be surprised if that's going to happen again. This chart here simply shows Bitcoin relative to tech stocks. It doesn't show its performance in US dollars. In other words, if I believe that Bitcoin goes down, but it will still do okay relative to tech stocks, the implication is that tech stocks are probably overvalued and that they might crash. This is the Schiller PE ratio. This is even the entire stock market, not just tech stocks. How are they valued relative to their earnings? When we buy a stock, we buy the future earnings of a company. So the price to earnings ratio measures how much we have to pay for those future earnings. How expensive are stocks? And currently we are at very similar levels to the height of the dot-com bubble. And while this argument might not be perfect, because we could have made the exact same argument in 1997 when we were at similar levels just before the Great Depression hit, and then subsequently stocks still outperformed by another 50%, it at least shows that stocks are not historically cheap. I think nobody can make the argument that stocks are now a steal. Everybody that buys stocks now has a very long time horizon or just wants to bet on the current wave and then exits very quickly when the wave turns around. We have already seen the turnaround of a speculative bubble in Korea, right? SK Hynix, the second largest tech stock in the entire country, it went down from the all-time high by 50%. So corrections can happen, even for large companies. This is now an isolated incident, but it doesn't necessarily have to stay isolated. And that's my thesis. I think that stocks are likely going to struggle. I don't have a crystal ball, but I do think that even though Bitcoin probably hasn't yet bottomed, most of its selling has already happened. And so comparatively speaking, it's probably going to hold up quite well. If it's your first time here, feel free to subscribe. I publish videos regularly. Feel free to also check out the premium membership. That's linked down below. I publish my views regularly over here. I also publish my trades in real time over here. This is my track record. Feel free to check it out. There's a 7-day money back guarantee. There's no risk in giving it a try. Thanks for watching and see you next time. Bye-bye.